Good morning, ladies and gentlemen. Thank you for joining us today for our webinar titled Is the Demise of Branch Banking Inevitable in the Philippines? Special thanks to our panelists for sparing the time to be with us today and Backbase for sponsoring this webinar. Now, since the advent of digital technologies, doomsayers have been predicting the death of branch banking. Within 10 years, 11,000 branches are expected to close in Southeast Asia, and in the Philippines, a 21% reduction is expected. This is according to a recent report by Roland Berger. Now, when you consider that with the pandemic rapidly driving up digital adoption, will the prophecies of branch banking's death come true, or are the reports of its death greatly exaggerated? Joining us today to discuss this, right on top there, we have Paulo Balta, who is the Senior Vice President and Special Assistant to the President on the Digital Bank Initiative for the Philippine National Bank. Below Paulo, we have Rachel Freeman. Rachel is the Chief Growth Officer at Time. Below Rachel, we have Randy Montesa, the Senior Vice President and Head of Card and Electronic Banking Group at the Land Bank of Philippines. And last but not least, Rudy Duta, a familiar face on this show. He's the Regional Head for ASEAN and South Asia at Backbase. Folks, welcome to the show. Thank you for joining us. So maybe we'll start with Paolo on top. And Paolo, we'll start with the question of whether or not you think branch banking would still be relevant within the next 5 to 10 years. What are your thoughts on that, Paolo?
Okay, but let me clarify first how we define a particular
Sure.
branch. If you refer to the branch as it currently is now, then I would say that yes, it is inevitable.
Mm,
However, if you think of a branch morphing into some other purpose, no, you would still see a branch there, but the purpose would now be different. Then I don't think it will be gone. For example, if you view the branch now as more of a servicing point, then I totally agree with you. You need to shrink it if that's how you view a branch to be a servicing point. But if you now view the branch as more of a selling point, a selling touch point, if you view the branch to be eventually a financial marketplace, if you view the branch to be servicing not only your own customers but also other banking customers as well, then I think the branches have a chance to survive. Now, the other point that I'd like to say is that when you talk about branch banking, what you see is, or what you imagine are really, the current bank branches, right? But in the Philippines, we now have what you call an agent bank, which could be it could not really your normal branch, but could be a community neighborhood store, a grocery, a pawn shop, and that is still considered, as far as I'm concerned, a branch. So it just simply changed the form. It just transformed into something else.
it's one of those sari stores that are quite popular
That's
as
correct.
agent
That's
banking.
correct.
Yeah, that model also exists in markets like Malaysia as well. So that's
Yes.
that's actually pretty interesting. Thanks for your insight, Paulo. And I think certainly we want to dive into the evolution of branches shortly. But in the meantime, let's move on to Rachel. And Rachel, seeing that you guys are a digital-only bank, what is your stance on whether or not branch banking will be relevant in the next 5 to 10 years, Rachel?
Thank you, Vince. And it's really great to be here and with this panel today. Actually, I mean, when we think about branch, it's similar in that where you think the question really is touch going to still be important, or is everything going to be digital? And while Time is a digital bank, when we think of digital, we actually mean the back end is all digital. We do not have paper in the bank. We only, in Time Bank in South Africa, only have about 230 staff in the bank. However, we actually do believe strongly in that touch is important. 85% of our customers have come into the bank and onboarded through our kiosks and grocery stores. We just think it's important actually to meet customers where they shop, eat, and play, and that's why we have the kiosks enable onboarding for our retail banking. That said, we actually do think that there are some things that are really right for digital banking, and that's consumer and retail banking. But actually, as customers go up market and need more complex products, that there is going to be more and more of a need and a continuation of touch. For example, very complex trade finance or complex SME financing or corporate financing is going to still require some kind of conversation. It cannot be completely digitized. So we do see that there's going to be a role for some type of branch or touch structure for that. But for retail banking, which can be fairly automated, we think that the automated part must be and will be digital. However, the touch part still is good, and people really like people, and that's where education needs to happen. And then the Philippines, with the level of unbanked people and underserved people, that it's going to be important to still do that type of education, and that's what we do in the grocery stores.
Thank you, Rachel. I mean, speaking of grocery stores, I guess, when one thinks about a very digital company, Amazon is probably a prime example, right? And even they purchase Whole Foods, and I guess that speaks to the value of the physical touch point. Thanks for that, Rachel. Let's move on to Randy. And Randy, of course, Land Bank, you guys work with a lot of rural communities, farmers, fishermen, and your the importance of branch might be quite different for a bank like Land Bank, right? So, what is your view on whether or not branch banking will be relevant in the next 5 to 10 years, Randy?
Yes. First of all, I would like to thank you, Vince, for inviting us and for Land Bank to share our thoughts on this important topic. In my case, I believe that there is no evidence supporting this forecast. I think that it will take at least 2 decades before this becomes a reality, if at all, in the Philippines. Based on data, 2019 data from the World Bank, the global average number of commercial bank branches was 11.5, while in the Philippines, it stood at 9.2 branches per 100,000 adults. From 2004, it stood at 9.79 bank branches per 100,000 adults. In 2016, it rose to 12.36 branches per 100,000 adults. In 2018, it was 11.57. In 2019, it was 11.5. So while there is evidence supporting the steady decline in the number of bank branches globally, the annual rate of decline is just not fast enough to forecast that branch banking will be irrelevant over the next 5 years. Specifically for the Philippines, in 2018, it was 9.02 bank branches. In 2019, it rose a bit to 9.2. So the evidence even points to a slow but steady increase in the number of bank branches nationwide. Thus, I do not foresee that bank branching or branch banking will become irrelevant, at least here in the Philippines, over the next 5 years. In fact, there is a study in the US by Self Financial predicting that bank branches could become extinct by 2034. That's a good 12, 13 years from now. So if we compare ourselves to the US, I think it's a long ways before the Philippines will ultimately see the last of the bank branches close down.
Thank you for the insight. So to clarify, the stats that you've quoted indicates that there's been an increase in branches in the past year.
Yes,
Is that
here
right?
in the Philippines, at least
I
up
see.
until 2019.
Great, cool. I think what would be interesting is also to kind of hear from the panelists later about what their plans are in terms of their own branch network to also get a sense, right? But in the meantime, let's move on to Reedy. Thanks for the insights, Randy. Reedy, what are your views on the relevance of branch banking in the near to medium term in the Philippines?
Yeah, thanks for that question, Vincent, and good morning, everybody, and great insights from Paulo, Randy, and Rachel. Now, I'll probably give an insight which is slightly more outsiders because I'm not a banker like the three other panelists today, but I'm somebody who is working with banks and helping on the entire digitization journey. And it might sound a little bit weird coming from somebody like me who is trying to sell what we call as digital banking, talking about branches in the way that I'm going to talk in the next couple of minutes. Now, I think as Paulo mentioned initially that yes, probably there has to be a relook at the way branches are being looked at because traditionally the local branch has been synonymous with a lot of manual processes, paperwork, Rachel spoke about how do you take out the entire paperwork, the documentation, and it has been synonymous with inconvenience and inefficiency. Right? And it's not just the perception of customers. I think it's broadly what the industry thinks too. But what we have also seen is that banking as such is a network society, and more so for countries within Asia, countries like Philippines, where the social interaction compared to the Western country is much more important compared to not being having that social interaction. As I said, it's a network society that we live in, and banking or branch banking is at that heart of that network society. But the point here is, would banks or branches be completely irrelevant, or would they have to be reimagined in the way they are today servicing customers? For example, if you're still expecting customers to walk into a branch and ask a teller that, hey, what is I just want to print my passbook. That is something probably that needs to be reimagined. That's not something that you would expect a customer to walk into a branch and ask for it. You have your mobile apps, your web apps, and all the other channels to do that. But again, as Rachel mentioned, when you go to complex products, and I'm not even going to trade finance, even when a person needs a loan, and let's say a person is looking for a mortgage loan, the person would like to talk to somebody, like to understand how is this particular product from this particular bank going to help me achieve my my long-term goals. At the end of the day, I think what banks are trying to do, and it could be any bank, it could be a traditional bank like Land Bank, or it could be a modern bank like Time. I think end of the day, banks are simply trying to help customers in their day-to-day lives. It could be a simple retail customer, it could be an SME, it could be a large corporate. So what needs to be reassessed, what needs to be looked at is branches, the way they are servicing customers today, the manner in which they are servicing, what transactions are they servicing. Can we relook at those transactions? Can we make branches as more of a customer advocacy and a customer relationship place, rather than helping them on day-to-day transactions? And I think, Vincent, in one of my previous discussions on the same panel earlier, I spoke about this one banker from the Philippines, a very senior banker whom I'm not going to name again. And this is back, I think, 2 years back, and I was making a presentation to him about digital banking, and I was talking about, you need to be digital first. And he snapped back and he said, "What do you mean by digital first? I'm sitting on this huge network of branches, which is my asset. You want me to sort of forget that? I'm not going to be digital first ever. I'm always going to be digital enabled, but don't talk to me about digital first." And I think that was a day when I sort of took a step back and realized that, yes, coming from a senior banker like the gentleman that I'm talking about, branches have their role, branches have their play. It's a matter of how do you weave that in. And it need not be branches only, right? As Rachel mentioned, and I think Paolo also mentioned, the sari stores, the kiosks, it's just the touch point that customers are expecting. And where you're giving that touch point is important, and how you're giving is also important.
Thank you for that, really. What's interesting that I find about our conversation so far is that given, and especially for Paulo, Rachel, and Reedy, who are very digitally focused, right? You guys are working on digital bank initiatives, your clients are mostly, you're providing digital solutions, that everyone agrees that, branch banking is here to stay within at least, the next decade or so. I guess that answers the question. The webinar is over, I suppose. No, but jokes aside, it is really fascinating, and I guess we can continue to look at what are the plans, how do we see branch banking evolving in the next few years. So maybe we can have Paulo back on stage. Paulo, are you there?
Yeah,
Right.
sorry.
Maybe you have Paulo back on stage to kind of talk about what are the plans in Philippine National Bank? Are you guys looking to rationalize your branch network? Are you looking to increase your branch network? What do you guys have in store?
Okay. Let's put it in the perspective of the new digital bank framework provided by the BSP, of which I believe Time is also a participant, right? The new digital bank framework, aside from allowing other entrants or participants to go into the financial industry, it also provides the incumbent banks to rationalize how they segment the market. And if you view the branch banking network as servicing more the retail clients. And if you also believe that a digital bank could service retail clients better from a customer experience perspective and more cost efficiently, then it will guide you into essentially asking yourself, what is then the purpose of the branch, right? Now, um, for me, it's not just about increasing or decreasing the number. It's not about the number. It's about, is there still a purpose for that particular branch in that area? You still have to consider that the real estate is prime property, all right? I mean, the real estate is still something that is an asset for you. However, if you can think out of the box and find a way to maximize that real estate that you have, then I don't think you would want to uh, let go of that particular spot. In fact, if you have found out a model that would work, you would even increase your touch points, right? So, in this age where, as I said, if you look at the current branch, if I were a non-customer of PNB, I will not go to that particular PNB branch, right? However, if I look at it from a business perspective, I'm paying for that rent, I'm paying for that space, I'm paying for everything in that branch, and yet I am intentionally limiting my customers, right? Now, so therefore, you have to really find a way to maximize that asset, and considering the connectivities that you now have in the financial industry, which you did not have 3, 4, 5 years back. And maybe, as I said, maybe look at the broader picture and say, don't think too secular about it, and say, what if I am, I'm really open? And again, even in Europe, there's already what you call open banking, right? What if I become open? What if I decide to entertain not only my own customers but also other bank customers? I mean, I'm a proponent of, I'm not really um, too hot about, okay, this is mine, this is yours. I don't want to talk to your guys. I mean, I'm not like that. A customer is a customer, right? A customer has a wallet, and I'd like to get as much of that wallet as I can. But I don't want I don't want that customer to say, okay, the only way that I can entertain you is you have an account with me. It doesn't necessarily matter that you have an account with me, right? For example, bills payment. If you look at bank branches now, even in the incumbent banks, they have decided to close out bills payment and say, okay, I will only entertain bills payment for my own customers. I mean, your own other customers also pay their electricity bills. Why can't you entertain them? Don't you get the fee out of it? Again, that's another thing to think about. And if you look at the current branch structure, if you really want that branch to be a profit center, shouldn't most of the people inside that branch be selling people or salespeople than servicing people? But if you look at the branch now, usually the only person selling would be the branch manager, and the rest are just simply doing servicing stuff, right? In fact, some of the branches even have back office functions inside that branch. Why don't you just take out that back office function and put it somewhere else, right? So again, it's really more of understanding really what are the demands of the market. Now, there's also a situation wherein a bank branch is inside an area like an industrial park, like in the Philippines. It's considered to be a retail bank branch, but the customers are corporate customers. So how can that be, right? And if, let us say, the market changes, let's say in a particular market, the percentage of retail customers go down and the percentage of corporate customers go up, how fast can you transform that branch? So therefore, I had a dream before. Why don't you construct a branch to be like a Lego branch, right? I can just mix and match, attach whatever. If it's a corporate branch, I have a Lego corporate branch set up, put it there. If the corporate customers go away or they're no longer there, take it out and just plug in the retail module, the retail Lego module. So again, to me, it's about making sure that each touch point, each branch as a touch point serves a particular purpose. So it doesn't matter how many they are. It doesn't matter if you're few. And the expense, if you're worried about the expense, I suggest you better worry about the revenue first than the expense. Because if you're earning a lot more money, I don't think you'll worry about the expense.
Great, very fair point. So what I'm sensing you're saying is that if you kind of take a step back and look at branches, not as branches, but as a kind of piece of real estate, then you'd be more flexible in your thinking in how you're going to utilize that. And we are certainly seeing a lot of interesting models overseas as well, right? Some are using it as co-working spaces, and these days with remote working, it could be even a decentralized office space for your workers as well. Who knows? That's
And you know what, Vincent? If you transform a branch to be more of a selling point than a servicing point, I
certainly.
assure you, most of your audit items will go down.
Certainly. Thanks for those interesting thoughts that you've shared with us. Let's move on to Rachel. And Rachel, do you have any insights about what Gold Time is planning to do with pertaining to branches in Philippines?
So we are very excited about Go Time. We got the letter from BSP exactly 1 month ago today. So we are now
Congratulations on that, by the
actively in
way.
the build phase of Go Time. So we're really bringing a lot of what we did with Time Bank in South Africa, but then tweaking it for the Philippines market. And since it is a joint venture with the Go Conway Group and the JG Summit and Robinson's Retail whole ecosystem, we're going to be working a lot with the ecosystem. So the idea is just like in South Africa that we're going to be deploying our kiosks into the retail stores so that you're going to be able to go into the bank and open a bank account within 3 minutes and get a personalized debit card. And then we're going to be activating the whole Robinsons ecosystem for cash in, cash out. So in South Africa, when we opened, we had about 1,000 kiosks, but we had 14,000 kind of cash registers in Pick and Pay, our partner there, that were de facto tellers. So we really utilize the grocery store. But as well, we have roaming kiosks, and we'll be able to integrate into employment places and go to even more remote areas with the roaming kiosks that we have, which plays the same role. But also, we are going to be leveraging the full ecosystem across with the data and with all of the different aspects of the JG Summit group in order to bring Go Time to full potential. When we think about, I guess, go back to this idea of branch or access, it's really more about access for us. And when we work, we try to solve three things. We try to solve physical access. That's how we can actually go to the place, because we do believe that there needs to be some kind of education, some kind of place to go to. And we use the grocery stores and have ambassadors who do a lot of education. So that's the physical access. Then there needs to be economic access. So in a number of different countries, banking can be quite expensive. And that isn't just the going to the actual location or the branch that can be expensive. Actually, fees can be expensive as well. And so with our cloud-based system, then we try to actually have a pay-as-you-go structure and bring down that increase economic access. And the third, which is most important, is emotional access. And we think that this is going to be quite powerful in achieving emotional access in the Philippines, where so many people have been underserved for a very long time, or not considered to be economic or worth banking for a long time. And so we're working on kind of products and services, gamification, financial literacy training, all these different access to improve the emotional access so that people are interested to open accounts and then really know how to use them. We often say at time that no one wakes up in the morning and wants to go open a bank account. It's not like a destination place to go to. However, what people do is they wake up in the morning and they want to go places or do things, or they have transactions they have to do. And what we try to make with time is to make those transactions as easy as possible. And by doing that, improve people's emotional access to finance.
Thank you for that, Rachel. I think it's certainly very interesting to observe how your model from South Africa can be kind of adapted into Philippines with your local partnership. That's something that we will definitely be keeping a close eye on. Thanks for that, Rachel. Let's move on to Randy. Randy, what is Landbank's plans in terms of its branch network? Are you guys looking to increase more branches, change the way your branch operate, or rationalize the branch? Give us some insights, Randy.
Sure. Thanks, Vincent. In 2018, we opened 70 new branches. In 2019, 30 new branches. So far, we have opened several more branches, including 2 mobile branches this year. We've been opening branch lights as well as agri-hubs all across the country. And with the impending merger with United Coconut Planters Bank, we forecast to add more than 100 branches to our existing branch network. So again, pardon me for providing the contrarian view, but I guess this is the paradox for Land Bank. Our electronic banking channels, platforms, have been registering over the roof increases for the past 2 years, but we are also registering in our branches, if not an increase, tapering off of branch transactions. So I guess this is what makes Land Bank unique compared to the other banks here in the Philippines, because not only do we cater to a wide range of customers, market segments like government agencies, local government units. We also have big corporations as part of our market segment, SMEs, MSMEs, and apart from that, Land Bank really is a policy bank with a social mandate of promoting inclusive growth in the countryside. So I guess this is really what makes us unique compared to the other banks.
Thank you for that, Randy. Interesting that in light of these reports claiming the decline of branch numbers, you're actually looking at increasing your branch numbers. I suppose maybe the way they
Yes,
measure
yes.
maybe the way they measure, they don't measure like the branch like kind of branches, right? You have your mobile branches, which I don't know if they consider into that report, but it's certainly interesting to hear something different that's happening on the ground versus what you're actually reading on reports. So thank you for that fascinating insight. Let's move on to Reedy now. Reedy, obviously you don't have a branch to rationalize or increase or whatnot. So let's shift the question a little bit for you, right? So I think one of the things that bankers often talk about is, oh, we also spoke about that a little bit earlier, is that a lot of kind of services, a lot of kind of high touch kind of services we provide to banking customers is very difficult to replicate in a digital form. Sometimes human interactions are preferred, but is that true in a sense that it's difficult to replicate, or is the digital equivalent of it not good enough? I mean, for example, personal finance advice can now be replicated on PFMs, right? And I think some consumers are preferring that form of interaction with the bank versus a person actually giving them financial advice, for example. So, what are your thoughts on whether or not it's a failure to replicate that service digitally, or is it just something that's really difficult to replicate digitally, some of these high touch services?
No, very interesting question, Vincent, again. And I'll probably take 2 examples, and you gave me a good segue for those examples. You spoke about personal finance management advisory. And the 2 examples, one is from the West and one is very local in Asia. So I'll first talk about what Monzo has been doing. I think we all know about Monzo, and we know about IFTTT that Monzo sort of took to the market in terms of if this, then that, right? It's a very simple logic, no AI, no ML, simple looking at data and using data and user behavior to drive more engagement. So I mean, since you brought up personal finance management, let's take a very simple example. A person creates let's say a budget for shopping every month, and let's say he puts in 10,000 pesos for that budget. And as a bank, Can you create an automatic campaign which says that every time the person hits 90% of that shopping budget, as a bank, you should reach out to him or her and say, listen, you're almost there. Do you want to go for an overdraft or a personal loan? Now that is intuitive, that is interactive, and that is not just a stop normal static campaign which keeps on running irrespective of the context of the customer. So that is one example, and I'll come back to why I spoke about it in a bit. The second example is more local, which is what Grab has been doing in the region. And I'm not going to talk about Grab as a financial institution, but I'm going to talk about Grab as an ecosystem player here. Paolo was talking about open banking, and I think this gives a very good example. And this is a documented case study of Grab in Indonesia, where the way they started targeting the small roadside eateries. So first they tied them on to Grab Food to help them deliver food digitally. Then they tied them up to the Grab accounting system so that their accounting can move digital. And then finally, when they tied up with OVO to start offering personal finances to these same set of small roadside eateries so that they can upgrade their entire establishment. Now, why I spoke about the second example is because the unique thing with the Grab or with some of the modern, Netflix or on all these examples that we keep citing, is that they have been able to get all their stakeholders, whether it's their customers, whether it's their internal employees, or whether it's their ecosystem, onto one single platform. And since we have been talking about branches and employees and service touch points, one of the main things which is lacking, and this is our insight, is that even today, banks, whether it's a more modern digital bank or a slightly more traditional bank, branch is always a different channel for them. The employees are operating in their own silo without having a lot of context in terms of what customers are doing when they're doing their self-servicing transactions. And that is where the sort of platform play that Grab or Netflix or these guys have been going into, where bring all stakeholders. It could be internal stakeholders, it could be external stakeholders, it could be the ecosystem. But ideally, your end state should be all of them operating on one single common platform, so that the context of the customer, the context of the employee is seamless and carried forward very easily. So I think that is one part to it, Vincent, in terms of probably why branches and digital banking and digitization are not happening hand in hand. Now, can platforms, I'm not going to sell Backbase here, but can platforms generally come in and sort of help that piece? And that is where the first example, which I spoke about, the example of Monzo, where using very simple if-then clause, I think, which all of us learned during our computer engineering days, that if this happen, you do that. Using something as simple as that, they have been able to take customer, personalization or hyper personalization, as we keep on saying, to a next level. You don't need AI, you don't need ML, you just need data, which all of us have access to. And the matter is, how do you use that data in a much more intelligent and better manner? So I think those are my 2 cents on this particular topic or this question, Vincent.
Thank you for that, really. I guess, the consideration we don't often think about is that while, the very high touch personalized kind of service is also good, like the kind of interactions you have with a digital platform, the frequency of it, I think there's real value in that as well, right? I mean, how many times can we interact with a bank in a branch, regardless of how high value that service is? Like if it's a
Absolutely.
digital platform, it's something that could happen daily, based on my transaction, my spending, based on those PFN examples that you have brought up. Thanks for sharing that insight. So I just wanted to remind the audience, you are welcome to ask questions during this session. If we see anything relevant to conversation, we'll bring it up and direct it to the speaker. But let me remind the audience to also, point out which speaker you would like to direct the question at, and we'll do our best to answer as many as we can. So let's move on to Paolo. And Paolo, I think, you raised a very good point earlier about not thinking of a branch as a branch, look at it as a more modular kind of Lego style of doing your branches. So of course, overseas we've seen a lot of different models, right? We've seen in rural areas there were a bank hub where several banks actually share the bank branches in spirit of sharing, like you said. So Monday to Tuesday is this bank, Wednesday to Thursday is this bank. So a lot of interesting things that people are toying around with around the world, right? What do you see happening in Philippines? What kind of evolution do you see in branch banking?
Well, again, a lot of automation is going to happen. Obviously, if a particular branch, I've seen a branch, for example, in a mall. It's a prime location, right? It's in a mall. And the branch area is so big, and more than half of it houses back office operations. I mean, I don't understand why it's even there, right? Uh, and you can now see small branches, right? And again, limited space. If you want to save a bit on the real estate, then you really need to automate, right? You really need to automate. Put in, as Rachel said, kiosks, self-service kiosks, so that at least the teller, and in fact, if you look at it, the only purpose of a bank teller is just to accept cash or give out cash. That's it. I mean, they don't really need to validate anything because when you do the transaction on the kiosk or any self-service terminal, that's basically it. So, I mean, those things. I mean, we just need to reimagine. And does a particular activity of a branch personnel really move the needle, either in terms of the revenue or in terms of cost efficiency? Again, I'm not talking about, okay, then let the branch just be like a payment center. I mean, payments will not keep the lights on. Okay, it's not enough. What will keep banking to be sustainable is loans or lending, right? So, can the branch help out in making sure that if you had 100 applicants, for example, instead of just approving 30, you can now be approving 80 or 90, increasing your batting average as far as getting more and more people to avail of your loan products, or even your investment products, or even your other wealth management products, right? So, again, I would really love to see a branch to be a store. Okay, it's a store, and financial products now are getting commoditized. So therefore, I mean, ergo, if you just look like it at a 7-Eleven, it's a 7-Eleven of financial services, right? And these financial services will apply to any customer. I mean, I'm sure each one would want to be able to avail of a loan, especially during these times. Each one would want to increase their wealth by availing of certain trust products or certain wealth products, right? So that's what I see now. How do you then? What's the interplay then between a mobile app or some digital bank versus the branch, right? Things that you can already do before you get to the branch, do it already on your mobile app. Don't do it inside a branch, right? I mean, so that when you get into the branch, you don't spend too much time inside the branch, which really frustrates a lot of people. You know, I've been a bank account holder, and I don't like going to a branch. All right, simply because I have to get a number, sit down, and wait for my turn. Right, when I could be doing a lot of things. So it's really more of making sure that the branch is there, and every second that I stay there means something for me, or I don't waste my time inside the branch. Although you can put other gimmicks inside, like put a camera, then you put smiley faces on everybody. Those things that you watch on TV. But the point is, I still see a benefit, but you really need to reimagine the purpose, and you really need to think about what would be the role of a branch in moving the needle, whether it be the revenue or the cost efficiency of the bank.
Thank you. I certainly agree with you. I mean, even personally, I would prefer not to head to the branch unless it's absolutely necessary. But it's still helpful to have them around, right? Like, I think recently in my neighborhood, the last bank branch has closed down, so I kind of have to drive further out to just access a self-service device to withdraw some cash.
Oh, by the way,
Yeah,
Vincent, I
yeah.
checked out. I did a check on the transactions being done by the teller on a typical
Uh-huh.
day.
What is it
Did you
like?
know that more than 90% can be done in a mobile POS?
Hmm.
All right.
I'm
So, and if you look at PNB, Philippine National Bank, which is part of the Lusutan group of companies, we're the only bank locally that has access to 800,000 sari-sari stores nationwide,
mm,
because the LT group of companies include Philip Morris, the beverage
mm,
and the brewery businesses, which has direct access to 800,000 sari-sari stores. So
mm,
imagine if I put a mobile POS in every sari-sari store, then I do have 800,000 branches ready in my phone. And I can already do 90% of all transactions being done at the branch. And what are
And
the other things that the branch teller does? The remaining 10% is do the daily trial balance register, do the reconciliation end of day, which again is not revenue generating. So, I mean, to me, that's already a good
great.
statistic to show that if you look at how the branches work now, it can actually be satisfied or fulfilled by another alternative.
Correct. Thank you for that, Paulo. I guess if we look at your metric, then it's not 1,100 branch sorry, not 21% reduced, but
Yeah,
600,000 additional bank branches for
yeah.
Philippines alone. I guess that depends on how you define it. Thanks for sharing your view, Paulo. Now let's move on to Rachel. And of course, Rachel, you bring in very different perspectives, right? From operating in South Africa with your very innovative model, and now you're trying to penetrate the Philippines market. What are your views in terms of how branch banking will look like in Philippines, how it will evolve and whatnot?
Okay, well, in terms of how it's going to evolve, I think we're all going to be very curious to see what happens when all of the digital banks come in.
Yeah, for
I
sure.
mean, just first on the whole issue of cash, I think that what is really important for digital banking is that anybody who's trying it out for the first time really needs to be able to have the feeling that they can quickly go in and out of cash. And so that's why we have enabled, and we'll be enabling all the tellers throughout the whole JG Summit Robinson's network, so that you can do cash in, cash out at the grocery store. So, and so that's how we turn all of those grocery store registers and all of those institutions into tellers. So instead of having people go to a separate place, they go where they normally go, which is into different types of retail stores. Also, there was a question about the kiosks. So that says kiosks need the proper training. Actually, these kiosks are self-service and they're only for onboarding. So our kiosks are only to start and onboard the customer. After that, you can just move forward, download the app and go forward, or you can even onboard just on the app, or you can spend time with one of our ambassadors who then help you download the app, help you understand the account, and then show you how to do it. But our goal is to then have as much that can be purchased digitally in the app itself after there's training for people who need it. And that means that, for example, in South Africa, in the app, you can buy bus tickets, you can buy plane tickets. And this isn't just Time Bank. This is all banks in South Africa have moved to this, where the banks actually run what we would call in Asia super apps, where you can, Netflix vouchers, PlayStation vouchers, gaming, all of those vouchers can be purchased in the bank app. Top up, electricity, bills, airtime, all of that stays in the account. And so what happens is once we actually onboard a customer, as well as teaching them how to go quickly in and out of cash, we actually enable them to use and to spend digitally within the account. So there's a building and trust in digital. So what we think is that it's not immediately that everyone's going to become digital. There's a journey, and it's very important to meet everybody on that journey and help them from wherever they stand to go forward in this journey, because there are a lot of efficiencies that can be achieved through digital. So if the question of, is there a lower operational cost for digital banks? We are more than 30% cheaper that we pass on to our customers than all other banks in South Africa. And, the idea is that would continue in all of the other banks that we launched, starting with Gotan. So we are thinking, how does our model, which is cloud-based and actually quite low on people? I mean, when you hear that we have 230 people plus 800 ambassadors in South Africa running a bank of 3.8 million customers, it's quite, a low number of people. And what we try to do is have most of, the bulk of it, which is the ambassadors, be customer-facing. So all of that enables to move forward and kind of turn things into a more accessible, more digital, more efficient structure of banking. So then you do see the question about buy now, pay later, and there are a number of different platforms and digital platforms for credit, and particularly for credit. And credit is one type of financial access, but we actually believe that it's really important to have all types of financial access. And that's when you achieve a served customer. So we also have buy now, pay later product. It's called More Time, and More Time will be launched in the Philippines. It's already operational in South Africa for credit, but we do this through the bank account. So you actually have it linked with the bank account, which means that you have a greater understanding as a bank as to what is the responsible way to lend. And right now, I think with the growth of digital lending everywhere, it's quite important for those assessments to be done responsibly. And we believe that we can be and do more responsible finance when we have the bank account, which you need to have when you have a licensing, you're a regulated bank, you actually can see you have the bank account, and you can then make better assessments for lending. But also it enables savings. And a number of the countries in the world, have poor savings records. South Africa is one of them. And by being able to bring in gamification through digital banks to enable kind of savings and being able to see every day the amount of interest you got, even if it's very small, that you can see every day you've increased this, and doing different structures with goal save and buckets for that is also a very powerful tool that can be done digitally.
Certainly interesting. More Time is a very catchy name.
We are quite proud of our name. We like having more time. It just enables us between time, more time, go time to then be super creative with all the other ways we can use time.
No, I like it. I love it. Thanks for your views, Rachel. Certainly, seems like you guys are using your physical touch points as a bridge to your digital touch points to then introduce embedded financing. Very interesting. Let's move on to Randy. Now, Randy, of course, you mentioned you guys are increasing your branch network over the next few years. Do you see any of this evolving into a different form? Are you introducing any new and cool branch ideas to the market in the Philippines?
Yes, Vince. I believe that the existing hybrid model of digital services and branches, the so-called omnichannel experience, will not disappear. What I can see are the following scenarios for possible future of branches, not necessarily for land bank evolution. First, I can see that the branches will remain as they are, which is flagship stores or extra channels to sell or to serve customers. Definitely, I can see that land bank will take on this evolution. Second is that the branches will support multiple bank brands. I think it was Paolo who mentioned this earlier. For example, if the sales volume is not enough, banks could consider sharing the real estate cost. So maybe I can give a tip to Rachel for another time, like time sharing, perhaps. But I don't foresee that land bank going into this model. A third model will be for the branches to transform to local office hubs, where employees will have social contact, even if they are spread over the country. I don't know if I have mentioned this previously, but Land Bank to date is the only bank present in all 81 provinces here in the Philippines. And our goal really is to have a physical presence in all 1,600 municipalities here in the Philippines. It could be in the form of ATMs or agent banking partners. So this way, if, say, a virus breaks out, the disaster or the potential impact could be limited to the few hubs. In fact, this is already part of the Land Bank's business continuity plan. So I definitely see this evolution for Land Bank. Finally, a fourth transformation could be that the branches will transform to local innovation, entrepreneurial support hubs, maybe even co-working spaces where they can support the micro, small, and medium enterprises and entrepreneurs. I can see that Land Bank could also take on this evolution. So don't get me wrong, Vince. Actually, in Land Bank, although there are a lot of transactions happening in the branches, we have also introduced some very unique innovations. Like in 2018, we launched our digital onboarding system, which has greatly facilitated the account opening for our customers, so they need not file for several pages of forms to open accounts. They just have to initiate the account opening online. We have also installed digital hubs or digital corners in our branches. This is to not only educate our existing clients, but also introduce them and hopefully wean them towards the use of other digital platforms.
Thank you for that, Randy. Now, of course, although you've been advocating branch and you've been the cheerleader for branch, I'm certain you guys are not neglecting your digital initiatives. And to those tuning in today who's not from the Philippines, who may not be so familiar, Land Bank, of course, also has a savings bank subsidiary that was the first to actually receive the digital banking license called the Overseas Filipino Bank. So, of course, there's no shortage of digital initiatives in Land Bank as well. But certainly very interesting. Randy, I do suggest that, after this webinar, you speak to Rachel and get some royalty for that great idea of timeshare. But I do think it's interesting, It's like we talk about open banking, and when we think about open banking, we often think about APIs and the sharing of these kind of things, right? But never really considered like real estate. So that's an interesting idea to actually ponder upon. Thanks again for sharing. Let's move on to Reedy. Now, of course, Reedy, it would be difficult for you to comment on the branch evolution in the Philippines. So maybe I'll tweak the question for you a little bit, right? Of course, we don't look at branch and customers in isolation. We look at an omni-channel strategy, like Randy mentioned. So moving forward, what do you think is the optimum kind of omni-channel strategy for securing and retaining customers and whatnot?
No, before I talk about that particular question, Vince,
Sure. Go ahead.
there is this, I think we all know about Chris Skinner, right? The author of the Digital Bank, and
Yes,
he had mentioned that banks have for years planned for disaster recovery if their technology fails, but I don't think any bank had planned for a disaster recovery if their buildings closed. So I think it's very pertinent in terms of what we're discussing today. And I think somewhere COVID in the last 18 odd months has played a huge role in the way we are relooking at branches. And again, I'm not going to add anything drastically different, but I think what Paolo mentioned a couple of times, and there was a question also that I saw from George, that branches need to move away from being servicing points to selling points. I think George was asking a question that is transitioning tellers to a more ambassadorial role of sort of a role. And I think that is what exactly the shift needs to happen. Now, and I'm not going to talk about branches as branches, but I'm talking about human touch points. Now, I think Paolo also mentioned this very interesting fact that 90% of the teller functionalities in terms of cash in, cash out can be done on MPOS systems. So branches need to be completely relooked at from being pure servicing channels today to more selling. And when I'm also talking about selling, we are not talking about small ticket loans, instant line of credit. You start talking about where the human interaction, the human emotion becomes more intertwined, like when somebody's buying a house, when somebody's buying a car, this is more on the retail side. When you go to the corporate or the transaction banking, obviously people might not be expected to reach out to a branch as much as you would expect the relationship manager or the sort of your dedicated banker to reach out to you and have those discussions in person. I know in today's day and age we have things like video banking and all of that, but I personally feel, as I said, and as Paolo said, if you move branches away from servicing points to selling points, that's where the shift is going to happen. Now coming to in terms of your broader question, how do we see as a larger omni-channel or a larger, the term that we like to use, a larger engagement strategy coming in? I think what we have seen, and I spoke about this earlier, in one of the joint reports that we commissioned along with IDC, we saw that, and I think Rachel also spoke about it, that digital banks are growing their customer bases almost 3x faster than traditional banks, and this is happening since 2019. And as a result of that, financial institutions that are invested more on digital channels, and again, a branch could also be a digital channel. I completely concur with what Randy was saying, that let's not look branch as a complete brick and mortar store. But financial institutions that have invested more in digital channels are seeing that advantage in terms of whether it is acquiring new customers, improving the loyalty, which is a very important metric, the way banks look at how they are doing well. And the third other important metric is how are you expanding the number of products an average customer is using. And another very interesting example that I'd like to quote here, one of the banks that we work with today in the region, without naming them, when we initiated a sort of a consulting study with them, we realized that the average product that a customer has with that bank is around 1.2. Okay. Now when we sort of relooked at a lot of their customer journeys, a lot of their customer processes, we saw an instant possibility of increasing that 1.2 up to as much as 3 products. Now imagine you're not looking at going out to new customers. It's still the same customer, but you're improving your revenue, you're improving your sales by probably using branches. And this is a case in point because this bank was heavily into branches, but they're using branches for servicing. Reimagining the branch network, doing more sales there, you could push 1.2 to 3, improve a lot of revenue, and improve your overall cross sell and upsell. So I think that is where the holistic picture, and that is where as I always keep on saying, technology is always going to be only an enabler. The important point is going to be the process that the bank has in mind. It could be a slightly more traditional bank like Land Bank. It could be a more digital savvy bank like Time, or what Paolo and team are trying to do at PNB, where carve out a completely digital offering. But it's how you're looking at customer as an end-to-end process. It's how you're looking at the customer life cycle, and then figuring out which touch point, which stakeholder would get mapped to it. I think that is how we like to look at things, rather than thinking about, is it a loans product? Is it coming out from the call center, or is it coming out from the branch? That's a slightly more traditional way of looking at things.
Thank you for that, really. All this conversation about the evolution of it, how it's changing. I'm starting to feel like we should have named the webinar Reimagining Branch Banking instead. It seems like a more accurate title for today's conversation. It certainly has been very interesting. So we've unfortunately run out of time. Why don't we move on? When I say time, I'm thinking of Rachel. So unfortunately run out of time. Why don't we move on to the closing thoughts, and I invite the panelists to share some final views, and also maybe address some points that perhaps maybe they feel they didn't have the opportunity to bring up during my line of questions. Paolo, let's start with you. You have the floor. Go ahead.
I'm on mute.
Paolo.
Okay. All right.
There you go. Yeah.
Okay. So, well, I guess, in the financial industry, a lot of things have been changing. Before the pandemic happened, we were trying to rack our brains how to get people to go on a digital platform, spending a lot on marketing and stuff. And we just needed a virus to be able to do that. And now everybody's on a digital platform. So at least, I don't want to call it a blessing, but that's essentially the consequence of this pandemic. Now that most of them are aware of what digital platforms are, now it's really ripe to now, enhance really the digital banking proposition. However, as I said, we need to take this opportunity to be able to segment the market and how we could serve customers better. I don't believe in a model where one size fits all. I have never believed in that kind of model, because if you believed in that, then you will never get to a situation where you can do a segment of one, marketing to a segment of one. And that is what digitization can provide for you. Now, as you reimagine your whole banking proposition, obviously, inevitably, you have to also reimagine how you treat your main touch point, which are the branches. And that's why I don't want to, just like you, Vincent, I don't want to call it a demise, because you will be displacing a lot of people by closing down branches, right? But I see it more constructively by repurposing the branch, so that ultimately the branch personnel will also be retooled, and therefore contribute heavily in moving the needle towards the revenue or cost efficiency. So to me, as I said, I still continue to believe that a bank branch in whatever form it may be. Again, it's not necessarily having the PNB name right on top of the signage, right? A bank branch, and I define a bank branch to be where a bank representative touches or gets in contact with a customer. The high touch is still important. All right. The high touch is still important. Maybe you can come up with a model where it's high touch and high tech at the same time. Right. So I still see a lot of promise, and I continue to believe that it will be there. It's not going to be, uh, erased from the face of the earth. But I really see a very big transformation happening. And if you really want to see a digital transformation happening in a bank, look at the branches first, right? Not in the back office. Look at the branches and see what you can transform there, because that is what customers see. And that is what customers represent the bank to be.
Mm.
Thank you, Vincent, for the opportunity. Again, thanks
Thank you,
also
Paul.
for my co-panelists. A pleasure sharing the floor with you guys.
It certainly has been interesting to hear your thoughts today, Paolo. Thanks once again. Let's move on to Rachel. Rachel, any closing thoughts for us? Any other important points you want to raise up before we end the session?
Well, thank you, Vince. It's been really interesting having this conversation, and I really look forward to actually coming to the Philippines. I'm in Singapore right now, and actually, since we started this whole initiative with uh, JG Summit, have not been able to come to the Philippines. So, first of all, I'm looking forward to actually on being on the ground and building up the bank and having us there. Secondly, Paolo, actually, this whole phrase of high tech, high touch is how we always describe ourselves at time. So I think thank you for that, for bringing it up, because I do think that the high tech, high touch model is the way to go. Because I think as much as we've learned a lot about digitization during COVID, I think the other main message of COVID is that people really like people. And as soon as any community opens up, then everybody rushes out to see other people. And that's maybe why we keep having waves, because there's such a drive for human interaction. And so, what we think is that it's really important to really understand the customers. And George had talked about, the products. We've spent a lot of time talking about kind of onboarding or the role of the branch, but actually branches aren't often designing the products. And it is incredibly important to really understand what customers need and, what's driving them to make their lives easier. And that's what, if digital banks through digitization can provide that, that's a great step forward. And we truly believe that we will be able, with the Go Conways, to democratize financial services in the Philippines. We often say that and talk about the democratization of travel that was done by Cebu Pacific. And we hope that GoTime can follow in that tradition by democratizing financial services in the Philippines.
Thank you. We certainly look forward to observing some of these plans that you have. We'll be keeping a close eye. Thanks again, Rachel, for sharing your views and thoughts with us. Let's move on to Randy. Randy, what are your closing thoughts and maybe some important points you want to raise to our audience before we go?
Since Rachel started it, let me also borrow the high tech, high touch phrase. I believe that omni-channel really is the final objective: mobile, internet, ATMs, and of course the physical branches. I believe that the channel for all the challenge for all the banks is to ensure that the customer experience on each of these channels is deeply embedded in a larger customer experience, data, and omni-channel digital transformation execution strategy. Customer segment of one in real time, use of real-time data and analytics, event-based marketing capabilities, campaign management, new analytics using online and on-site analytics, social analytics, coupled with new channels like chatbot services, digital marketing, etc. I believe this is really the way to go.
Thank you for that. Again, thank you for sharing some of the interesting ideas and a contrarian viewpoint today. It's interesting to see the difference. Thanks again, Randy. Let's move on to Reedy. Reedy, what are your closing thoughts and important points you want to raise before we go?
So see, representing Backbase, I need business from all types of banks. Okay, so and today, even if you look at our presence in the Philippines and across the region, we have been working with all types of banks, more traditional banks like the BDOs and the BPIs, and then the more new age digital banks as well. So I think I would somewhere concur with what both Randy said and what Rachel and Paolo said. And again, going back to that one senior banker that I met 2 years back, who put my perspectives into place. He said, "Listen, don't talk about digital. Keep talking about phygital," and that is how I want things to happen. And I think that's my end summary here. That every approach has its own nuances and pros and cons. What is most important is to look at a channel as a channel, not really overemphasize on web or mobile or branch. A channel is a channel, and that important is how are you as a bank servicing customers, and at the same time allowing your internal employees and empowering them to service customers in also a very seamless manner. So and that's where platforms like Backbase come in. That's where technology comes in as an enabler to the processes that banks are trying to make. And yeah, I'm just going to wish Rachel in her endeavors in the Philippines. I know Paulo is also doing a lot, so I want to wish him all the best. And same to Randy, because Randy's thought process and strategy is a little bit different, and would be very keen to sort of follow what Land Bank would be doing, because it is a little bit interesting as well, right? So thank you, Vince, for having me, and wishing all the three panelists very best in their endeavors.
Always glad to have you reading now. When I started the webinar, I was expecting maybe some different views or answers to the question of branch banking, but this has certainly been surprising and interesting. And I guess that's what keeps webinars interesting, when you have all this kind of different views that's coming out. And I certainly appreciated everyone for taking the time, and all the audience for tuning in with us for the past hour. So we hope you have a great rest of the day, and thank you once again for tuning in. Take care now, and bye bye.